Well, hello everyone. It's October 1st and the Dow Jones is down about 340 points. We're going to close in about 9 minutes or so. We are touching the 50-day moving average. The question is, why is this happening? It's happening because of the manufacturing index. Anything below 50 is telling us that manufacturing is slowing down. It came in at 4780. It was lower than expected. Why? China. China. Aluminum, steel, all those are being exported, imported. There's a lot of manufacturing as a result of this trade war with China that's being slowed down, and that's having an impact on the economy. And the fear is that's going to move into the GDP, and that's going to lower GDP, and the GDP number is going to be below 2%. And we don't want that, because if that happens, that's going to have a major impact on the stock market. This right now is a hiccup, but we do need to figure things out with China. So we're at the 50-day moving average. The Dow Jones, believe it or not, is actually stronger than the S&P 500. And the reason the S&P 500 is weaker than the Dow Jones, see here it's already below the 50-day moving average, is because of technology also being impacted by China. This is the top 100 NASDAQ stocks. As you can see here, they've been trading below the 50-day moving average for some time. Now, the reason why we're seeing this right now is because consumers and traders don't know when China will come to an end. They don't know when to expect an end to it. Here's my prognosis. I believe the closer we get to elections, the more vulnerable it puts our economy, because China can really start pushing it to us and it'll start pulling the stock market. And President Trump wants to be reelected, and having a strong stock market is a very, very, very important card that he has in his pocket. I mean, look at this thing. We're near 52-week highs. The stock market is I mean, ultimately, here's 52-week highs. We're right here. It's not a big difference. I mean, what? 30,100 or 30,000, right around 30,000. We're at 29,300. We're like less than a third of a percent away from all-time highs. So if you look at it from a broad perspective, the stock market's not doing bad. My take is we're going to be moving between the 50-day moving average and the 200-day moving average, kind of up and down till China is resolved. I believe over the next few months we'll see a resolution, because we don't want to get too close to the elections with this trade war. It's going to make U.S. much more vulnerable. It's going to make Trump very vulnerable. Trump does not like vulnerability. He doesn't like to lose control. And if he plays it too close to the elections, he's going to do that. Nobody wants that. China is being passive aggressive. They're saying, let's push this back as close to elections as we can. Trump is not going to allow that to happen. The odds are we're going to resolve our differences. And Treasury bonds. Look at Treasury bonds right now. Market is down 300 points. We're barely up right now. We're barely up. We're near the 50-day moving average. That means money is not flowing into fixed income. That means the fear level is not that high right now. Let me show you the VIX. Let's see if the VIX is above 20. VIX is a short-term index that measures the fear level in the market. And I'm kind of going through this analysis with you so you kind of can get inside my head. It's not even a 20. Anything below 20 is telling us that the market is not fearful in the short term. And right now, the level is at 18 and the market's down 300 points. So this is not substantial. Expect the market to stick around the 50-day moving average, right around here, kind of back and forth, maybe between 297 and 293 on the S&P. Don't expect major movement at this point. The market is going to be playing wait and see. Also, we have employment numbers right here. Let me show you. We have jobless claims, and we have employment numbers, and Jerome Powell, the head of the Fed, is speaking on Friday. So I'm not expecting too much before Friday. Expect a soft landing, possibly congestion, but I don't expect too much downside for the next few days. Again, don't worry about don't take the pulse of the market every 5 minutes. it's healthy for the market to see some congestion, some trading range. This is expected, especially based on the weaker than expected ISM manufacturing index. China is impacting the U.S. There's no question about it, but interest rates are near historic lows and stocks are within a third of a percentage point of near all-time highs. So I wouldn't worry too much about a bear market. It's not a big concern yet, and I'm expecting a good bull run for at least another year, maybe a year and a half. Talk to you guys later.